Apes and Apettes, welcome back to the channel and welcome to the closing day, the last couple of minutes of trading in a very volatile week. AMC did hit a peak today of $17.99 per share. We are currently down 4 cents on the day, down 0.10%. We might just go positive right here, and it looks like we are right about now-ish. Yeah, we're actually positive now. So there we go, baby. We hit a low of 1653. Now we are positive. We are ripping into the end of the day. So is the S&P 500. So things are looking pretty good today. The S&P up about 2%. The NASDAQ not up quite as much as that, about 1. Let's actually refresh that. It still says futures on it. NASDAQ about 1.46%, and the Dow Jones Industrial Average up about 2.5%. So a solid day nonetheless across the board. AMC didn't really feel that solid for most of the day, but I think that sets us up for a very bullish week for next week. And I want to go over why I think that. Obviously, as things develop over the weekend, this could change. So this is kind of preliminary to say the least. But I do want to give you guys all of the coverage and information that you need to know for the day. And like I said, heading into next week. So hit that like button for me, subscribe to the channel, and comment down below. If we can get 1,000 likes on this video, I will dress up as a leprechaun, because ever since I started wearing the lucky hat, we tend to be a bit more lucky as far as recently. So let's get into all of this information. Like I said, AMC is back and forth right now, from positive to red, but we have seen a very nice recovery. And why is this such a big deal? Why is this such a big deal? Well, when there's this level of fear in the markets, specifically over the past week, seen a lot of fear in the markets. People are not really buying the dip as much as they would during a normal decline. But we're seeing this recovery on Friday. That means that people are willing to buy and hold through the weekend, and that right there, simply put, is a very good sign. Now, this is all going to come down to Russia-Ukraine tensions over the weekend. It looks like Ukraine is fighting back on Russia, and now Russia wants to basically start talking about ending this conflict. Pretty interesting, but the U.S. dismisses Moscow's offer of talks with Kyiv as not real diplomacy. And that's not really, I mean, it's probably not real diplomacy, but that's what they are saying. If that happens next week for whatever reason, the markets would be up big on Monday. I don't necessarily think that is going to happen, but we do have the big fear catalyst out of the way, which was the invasion. And you might hear this over the weekend if you have not heard this already, but it's buy the invasion. That's a saying that is being thrown around right now. And you're seeing people buying the invasion, because throughout all of history, when you see invasions of other countries that spread fear in the markets, most of the fear happens before that invasion. Now, this could be different depending on what happens. Who knows? Things can develop, and we will bring you guys that information over the weekend as well. But take a look at some of these headlines. EU could exclude Russia from SWIFT on another round of sanctions. On that front, if Russia does get excluded from SWIFT, I would expect the markets to take a downward move, because that has the biggest impact comparatively to sanctioning their banks. Like, American investors, they don't care about that. But if you sanction SWIFT and shut that down, that's literally restricting the money that can flow in and out of the country. And the markets, they tend to take big red candles on even the word of, shutting Russia out of SWIFT. So keep an eye on that over the weekend. I definitely will be. But take a look at this headline. Russian troops have stopped near the northeast city of Konotop after suffering heavy losses during a fight, Ukraine's land forces said. And they actually just came on Fox News today and said that they are clobbering Russian forces. So that's definitely good to hear. Like I said, they're not a pushover, but it's going to affect the markets. That's why we must cover it here on this channel. But now I want to switch gears. I do want to talk about this, which I mentioned in the video earlier. It says new SEC short sale rules would force investors to submit updates each month. Key points. Wall Street's top supervisor said the proposed changes would require investors to collect and submit certain short sale data to the SEC each month. SEC Chairman Gary Gensler said that the new rules would apply to investors who hold a short position of at least 10 million or equivalent to 2.5% or more of the total shares outstanding. So they want to see all short positions. $10 million by institutional standards, that's pretty small. And, they want to know what's going on behind the scenes with hedge funds and institutional investors, because they don't want to undermine the markets. They don't want to have 20 more Archegos situations. Then you're looking at a credit crisis, a debt crisis. So that's the point of that. And this all stems from the meme stock saga. And like we were saying, even back June in 2021 and throughout the whole last year, the government, the SEC, everybody, they work very, very slow. So there's probably going to be more things like this coming out here throughout the rest of the year. And that, while it won't cause the MOAS directly, it definitely puts a lot of pressure on the short sellers. It says the proposed rules are the latest attempt by the SEC to magnify its oversight of short selling, which has been blamed for causing wild price swings in equities like GameStop. Like we just said, that's what that stems from. And congratulations to all of you guys that have been putting out the due diligence out there, been, putting in all of these countless hours of work almost on a daily basis for a lot of people, and it's being recognized. You're essentially enacting a change in the financial markets. As far as something that is very important as well, and this is something that I personally watch very carefully, and that is why you are seeing the Dow Jones Industrial Average up about 1% more than the tech-heavy NASDAQ. It is this, the Fed Rate Monitor. Look it up, Fed Rate Monitor tool. You could see that, what were we at? Yesterday we were at 81.8% probability of a 25% rate hike and only an 18% probability of a 0.5% rate hike. Now we're at 22% probability. So whenever this goes up, this 0.5% rate hike odds, you tend to see the Dow, your more staple stocks, do a lot better. Everything's doing decent today, but the Dow is definitely carrying most of the weight, which that was different yesterday when the NASDAQ was up 3% and the Dow was only up about 1%. It's because of this. Everything revolves around the Fed when it comes down to it. The markets, they can get over this pretty damn quick if the Fed were to say, hey, we're not even going to think about raising rates. It looks like inflation is coming down in a substantial way. Markets would rip no matter what happens with Russia or Ukraine. The Fed is credit. They are money. They can take or add money to the system. Anytime you're going to add money, the markets, they're going to react bullishly. Anytime you're going to take money away at a faster pace, they're going to act very fearful and worried, right? Because you're taking money out of the stock market and, more importantly, out of the economy. So pay attention to that. Like I said, investing.com/Fed Rate Monitor tool. Now, as far as the max pain for next week, $17 per share. We are currently sitting at 1763, down about 0.25%. So we might see that break. We got 2 minutes left in trading. We might see that break to positive. If we don't, you're likely to see that here in after hours, and it is fighting. It is fighting so hard. Only 2 pennies down on the day. A wildly bullish day, in my personal opinion. As far as the Stocko tracker data, this is also something that I do want to highlight for you guys, that even though we don't see a lot of, call activity or put activity for the next 2 weeks, the ratios here are very large. So on any single expiration day, specifically this one right here, March 18th, you don't really see a lot of calls that are in the money. Obviously, the stock has went down a lot, but you see much more activity on the out of the money call side. So like this ratio right here, 7,800 calls that are in the money for March 18th. And then, 280,000 that are out of the money. If you do see a move up next week or within the next couple of weeks, and you see that ratio start to go more even, then you're definitely going to see a lot of hedging that has to happen just overall. because that's what 28 million shares that would potentially have to be hedged for if AMC ran through all of the strikes on that March 18th expiration. I don't think that would happen, but even if half of that happened, that's still 10 14 million shares that would have to be hedged. So looking good right there in that aspect. That's basically all we have for this video. I do want to briefly take a look at the technicals, and we can look at that right now. Down 2%, down 2 cents in regular trading, and we were just up 2 cents in after hours. So that'll be interesting. I want to see how we close and hold up here in after hours. But if we look at the SPY, definitely a solid day as well. If we pull this out to the daily candlestick chart, we could see that AMC is sitting at a very comfortable level. This really, consolidation zone, I should call it. And you guys see this wick right here. We were still above this critical level right here. This line I've had drawn out for a while at $16.23, but we bounced all the way back up. I did want to see a close above $17.75. That is this line right here. It might happen here in after hours. If it does, that's going to be a very important level as well. And we should get that room to make that next leg up, break out above 1850, and then ultimately, hopefully, make our way back to 20. But the single biggest thing I want to highlight in this video is that you are seeing strength in AMC stock today. You are seeing people buying the stock heading into a weekend that can feel very long, and you can see a lot of news that does come out over the weekend. So definitely a strong sign that we are seeing. Let's go ahead and pull up the Fintel data. Let's see if there's any more 13F filings that are coming out. An additional 3,000 shares right there. The Russell increased their position 2%. Brand new 500 share position increased by 3%, increased by 22%, increased by 5, 2, brand new position right there. A couple decreases. JP Morgan small company fund increased their position by 127%. JP Morgan again value fund increased their position by 105%. JP Morgan Insurance Trust increased their position by 122%, 41%. So long story short, it's looking very good. And finally, I don't want to leave this out, but the option institutional order flow, 23% positive, 10 orders totaling $1.14 million. So we've seen this move today off of very little activity as far as options are concerned. For reference, yesterday we've seen $22 million worth of options traded by institutional investors. Today you've seen 1.14 million. So that is what, almost 20x the difference here. Less money today than what was traded yesterday, and the stock almost rebounded. I take that as a win any day of the week. So that's going to be all for this video. Thank you guys for watching, and I will see you in the next one.